Guess who's here? Mike O'Rourke, the Chief Market Strategist at BTIG, visiting from my hometown, Philadelphia. Sheila here as well. Okay, what do you make of the markets? I
like the markets here. I think we're setting up a nice year-end here. We're bouncing up against resistance around the time 1250, which is the level of the S&P 500 when Lehman failed. So we're having a little trouble getting through that. But
why are we having trouble getting through that, though?
You know, I think it's a big psychological event. So obviously we've been in a long healing process now. But it looks like the market's ready to overtake this. We see the consumers coming back this Christmas. That's a major positive.
But that's not been a catalyst to get us over, though.
No, it hasn't been. But you're seeing, I think Main Street's starting to feel a lot better, and I think that's going to carry through in 2011. I think that's going to be a big theme next year.
Well, I mean, when you take a look at the market next year, we've been looking at a lot of the average strategist forecasts. 1370 now is what they're calling for the mean. So that's a 10% increase from what we've already had this year, which is almost an 11% increase. I mean, you have what's going on in Korea, you have what's going on in Europe, you have what's going on here in the U.S., and nothing is seeming to shake these bulls off.
Well, you know what? The interesting thing is you're looking at this market next year. There's a high likelihood we're going to have record earnings next year, and that's you know, an amazing statement after what we've been through in this economy. So I think,
didn't we learn in the last few quarters that earnings don't matter? It's really the revenue growth.
Well, not necessarily, because it's funny. A decade ago, if we were sitting here having this conversation, we talked about how revenues are growing so quickly, but the earnings weren't there, and that was a bubble. So I think the earnings are the foundation. I think the revenue growth will come with the economy as we progress. But I think it's a great situation because basically you're buying stocks that haven't gone anywhere in 12 years, and you're going to probably have a record earnings year. I think it's a great setup.
So then where would you be buying then?
You know, I like large cap U.S. multinationals, so high quality S&P 100 names. Those big companies.
Liked that, but Mike, you've liked that for a while.
I have liked that for a while because that's where the value is. All these companies have tons of excess cash. They can buy back stock. They can do acquisitions. They've also downsized themselves during the recession. They cut all their dead weight, their excess here in the United States, and they're reinvesting globally. And I think that's a great opportunity.
You know, you mentioned the consumer. One of the big things that's been in the news lately is that gas prices now over $3 a gallon here. How much of a dent is that going to put into the household income?
You know, here's the interesting thing with gas prices. We've been here with oil and gas prices before. You know, in 2008, we saw oil go to 150. That's where the demand destruction really kicked in there. That's where people started really feeling pain. So I guess the way I look at it from this perspective is, you know, even if oil gets above $100 a barrel, as long as it doesn't get too far from there, I don't think it's going to be a big problem.
But Mike, you know, I was saying that before that, you know, you've had this idea of large cap multinationals as the place to be. But give me a new idea for 2011, please. Give me a new idea.
Well, you know, I actually think the whole commodity trade has run its course in a big way. So that'd be something I'm bearish on. You know, some of the key tenets of that trade have been, you know, you're going to see this massive dollar devaluation, or you're going to see this pickup in inflation. Neither has it happened this year. You know, the actual low for the dollar index was, you know, almost 2 years ago.
Okay.
So I think we're going to see more currency stability as far as in terms of the dollar coming in 2011.
I mean, you see the dollar rebounding, and so therefore the commodity trade is off?
Well, I see it stabilizing, people realizing that the dollar is not going to break down here. You know, it is the reserve currency. You know, it's the worst house, it's the best house in a bad neighborhood of currencies as reserve currencies, and that's it. So people are stuck with the dollar. So you're not going to see this devaluation people have expected. And I think when those, you know, those themes don't play out in 2011, I think people will start shying away from commodities again.